Welcome to this explainer. Look, if you've been filing taxes in Pakistan for a while, you probably associate tax season with a healthy dose of anxiety, right? Piles of paperwork, trying to remember every single transaction from the past 12 months, and, of course, that lingering fear of a random audit. Well, the Federal Board of Revenue is completely transforming the upcoming tax season for 2025 to 2026, and we're going to break down exactly what that means for you. Basically, we're looking at a fundamental shift from the old self-assessment model to what is essentially a no blind spot regime.
Okay, let's dive right into this, because the days of operating under the radar, those are coming to an abrupt end. The FBR is spearheading a massive digital revolution right now. We're witnessing a complete paradigm shift toward absolute digital transparency. The system is moving away from simply taking your word for things to a highly integrated, data-driven ecosystem that leaves literally zero room for ambiguity. The gray area we all kind of knew about, it's officially gone.
The sheer scale of the FBR's new technological infrastructure inside the Irish portal is honestly staggering. What they're doing is creating a digital mirror of your entire financial life. Everything is now interconnected in the FBR's back end. We're talking your domestic purchases, your imports, your real estate transactions, and yes, even your social media performance metrics. They possess a granular, highly detailed view of your economic footprint before you even log in to file. And this brings us to a stark contrast in how you need to approach your filing going forward. The past was all about manual data entry, right? Navigating those labyrinthine forms and just hoping you didn't miss a zero somewhere. But the future? It's entirely about data verification. You're no longer just filling out empty boxes, you're reconciling data the system already has on you. It's a massive, fundamental change in your role as a taxpayer.
And that pre-existing knowledge brings us to a really critical new term you absolutely need to know: indicative data. Under the new Summary of Economic Transactions interface, the FBR basically acts as a preliminary tax reconciliation tool. It pre-populates your withholding tax and your sales tax records. It explicitly categorizes your domestic purchases, imports, sales, and exports. Essentially, the system already knows the answer to your financial activity before you even ask the question.
But here's the catch, and it's a big one. The FBR's new Dear Taxpayer notification explicitly states that while they provide this indicative data to help you out, the correct reporting of income is primarily your own responsibility. So, if their pre-populated data is missing something or if there's a discrepancy, you are legally on the hook for ensuring the accurate reporting of your income. You can't just blindly click Accept and then blame the system later if something was left out.
Section 1. Taxing the attention economy, specifically focusing on social media influencers.
So the FBR has become incredibly sophisticated in tracking digital income. Right there on page 17 of the new guidelines, there's a dedicated section for income from social media content. Creators now have to report highly specific performance metrics: the total number of posts you made during the year, your average number of views per piece of content, and the actual total remuneration received in both cash and kind. Why go into this much detail? Because the FBR is now actively cross-referencing your platform analytics directly with your banking inflows.
And for content creators, this right here is the massive wake-up call: remuneration in kind. We're talking about non-cash payments, those PR packages, the gifted smartphones, the sponsored luxury trips to Dubai or the northern areas. Well, the taxman wants their cut of the view. These are all now officially viewed as quantifiable, taxable income. The FBR has completely figured out how to value the attention economy, and they're bringing the whole shebang firmly under the tax net.
Section 2. The property and wealth trap. We've covered the modern influencers, but what about traditional wealth? Well, the FBR now issues a very stern warning. The wealth statement serves as a comprehensive net worth tracker. Look, if you bought a property, you paid it withholding tax. It's that simple. The FBR's backend automatically matches that tax record right back to you. So if you go into your wealth statement and try to omit that property, the system already knows. It flags it instantly and warns you that non-declaration may entail legal action. You simply cannot hide real estate assets anymore, period.
The FBR is also actively closing down historic loopholes. One of the absolute oldest tricks in the book for tax evasion was the anonymous gifted-out asset transfer. Shifting wealth around to lower a tax bracket. Well, not anymore. Now you have to officially categorize the gift, and crucially, you must provide the exact tax identity of the person receiving it, their CNIC, NTN, or passport number. By demanding the donee's ID, they ensure the wealth is fully accounted for on both ends of the transaction. No more vanishing assets.
Section 3. Salary updates and targeted incentives.
Now, it's not all just strict oversight and warnings. For the salary class, the new interface creates a super tight integrated link between you and your employer's payroll withholding records. You now have to list your employer registration number, but pay close attention here, because the FBR is zooming in on previously overlooked fringe benefits, expenditure reimbursements, and profits in lieu of salary. A really critical detail is the explicit inclusion of transport monetization for government servants. Absolutely everything is being quantified.
But here are the silver linings I mentioned earlier. The tax code is actually being actively used right now to reward social policy and financial inclusion. There's a very specific, notable incentive under Code 9309 offering tax reductions for 100% women-owned startups. There are also direct deductions from mandatory zakat under Section 60, allowances for the Workers' Welfare Fund under Section 60A, and credits for approved charitable donations under Section 61. So yes, the FBR is rigorously collecting, but they are also cleanly rewarding socially progressive business structures.
Section 4. The ultimate legal burden.
So what does all this interconnected data, the automatic flagging, and this massive new digital infrastructure actually mean for your legal defensive strategy this year? Well, it means the margin for non-declaration has essentially vanished completely. The priority for the 2025-2026 cycle must be absolute alignment. Your financial data is already visible to the regulator through indicative data. Executing a timely and, above all, perfectly accurate return is no longer just a statutory requirement, it is your primary defensive necessity.
As we wrap up this explainer, I want to leave you with a thought to really reflect on. As the FBR flips the switch on this digital mirror, are you ready for what it reflects? How is this unprecedented level of digital oversight going to change your approach to keeping your financial records and managing your assets in the year ahead? The system is watching, and it's time to ensure your records are as sharp as theirs. Thanks so much for joining me, and honestly, best of luck this tax season.